This is FinTech Futures at Sibos, and I am joined by Sarah Saigol from Lloyds Bank. Sarah, thank you so much for taking the time out to speak with us. Just to get started, let's give us a quick introduction to yourself and your role at Lloyds.
Good afternoon. So I run the cash management and payments business in the corporate institutional bank at Lloyds. So I'm responsible for the product and the distribution of all of our transaction banking products to our corporate clients and our institutional clients.
Excellent, excellent. And you're here speaking on a panel about whether the future of money is digital and instant. For those unable to attend, let's give us a quick breakdown of what you talked about in that discussion, sort of the key takeaways come from it.
Yeah, that's right. So it was first thing on Monday morning, which feels like a lifetime ago now in terms of Sibos time. But it was a great panel. I really enjoyed being part of it. We had a really diverse panellist collection. So we had sort of UK, India, Middle East and the US represented. And I think that was one of the key things that came out of the panel, is that the take-up of instant payments and faster payment schemes across the world has behaved very differently depending on the geography. So obviously, being taken up very rapidly by retail customers in the UK, gradual adoption by corporates, slower in the US, but a massive explosion of activity in India through COVID as banking inclusion has really sort of taken hold on that sort of Middle Eastern economy. Really interesting to see how different countries and different populations have adopted the different payment methods. There were some common themes, though, I think, that came through. I think lots of countries having capability to manage domestic faster payments now in a very efficient and well-adopted way. However, when you start to look across borders, the interoperability between countries still feels quite fragmented, and the need for collaboration and cohesion driven by regulators and regulatory and compliance policies needed to sort of drive through some cohesion on an international level to ensure we've got proper cross-border interoperability for cross-border payments in the future. We talked a lot about the topics of fraud and security, which seems to be something that's on everybody's mind. So lots of the meetings that I've had this week in Sibos, that's been a key theme. And how can we ensure that we've got the best fraud detection techniques to protect customers from the sort of enhanced risk of irrecoverability of faster payments. And then, we couldn't walk past the sort of the tech challenge of being part of a large bank, and how do we partner or how do we build ourselves to be able to create, truly customer-centric journeys, because that's really what's going to drive the adoption of instant payments. It's creating a journey for the customer that brings them value. So it was a fascinating discussion.
Excellent. And one of the topics I wanted to talk to you about today was CBDCs. So I know Lloyds recently released its Financial Institution Sentiment Survey, and one of the things covered on that was CBDCs and whether institutions would welcome or not the digital pound in the UK. Can you tell us what the conclusions were from that?
Yeah, sure. So the Financial Institution Sentiment Survey is it's the 8th one that we've run. We survey 100 different senior decision makers across banks and non-bank FIs in the UK to get their sort of state of the nation on the UK sort of financial economy. And one of the questions we were interested to find out more about this year was, what were the attitudes towards the adoption of a CBDC? I wasn't surprised by the outcome. So, whilst around a quarter of the respondents said that they welcomed the idea of a CBDC, about a third didn't welcome it, and the majority didn't see the use case. And I think, it is early days, and I think, it's nascent technology, and we really need to continue to work together to identify where the real need for CBDC in a developed economy would manifest itself.
Yeah. From your perspective, do you see this picking up over time? Do you see that eventually, maybe if we look a few years down the line, that more people will start actually seeing the use cases for this?
So I think it depends where you're based. So in a developing economy, so like Nigeria, for instance, where they have a central bank digital currency, you can see the clear use cases, around financial inclusion, around fraud and security. In the UK, we're at an earlier stage in the journey, having a very developed financial system already. I think it's the analogy is, why why build the telephone line if you can go straight to mobile for some developing economies where we already have, really good technology and infrastructure that supports a functional financial system in economies like the UK and the US. So it's harder to see the immediate use case. However, as one of the biggest UK banks, we are committed to working with the central bank to look at the potential deliverability and applicability of this. And I do think over time it will become clearer as we start to sort of test our foot in the water with some initial use cases, which I imagine will be in the wholesale market. Because one of the responses in the survey really was that there was a lack of trust and understanding, was the perception amongst the retail customer base.
I mean, moving forward as well, I mean, do you think with the amount of research that's being done at the moment, the amount of trials that are being run, it's more just a matter of time when it's going to come in as opposed to if it's going to come in,
So I can't comment on sort of open policy decisions that are currently live with the UK Treasury and the Bank of England. Obviously we've taken part in the consultancy period. We're waiting for the outcome of that consultation, which closed in June, and then we expect a decision on the UK digital pound by 2025. So we will continue to work with the Bank of England and other institutions to sort of understand what the benefits of a CBDC would bring to the financial system, the economy and consumers. I think one thing's for certain though, if we do go down the route of a digital pound, we will need a really clear transition plan from the regulators that sort of sets out how this will work from a macroeconomic perspective, how it will impact the banks, how it will impact corporates and how it will impact consumers, because I think that's all very unclear at the present time.
So, I mean, what steps then? I mean, you mentioned obviously Nigeria have already implemented a CBDC over there. What kind of steps are the UK financial institutions taking to really make sure that they're prepared for CBDCs being developed in other countries as well?
Yeah, well, the results of our survey showed that most respondents were not actually taking active steps. 12% only were partnering with fintechs and other businesses to try and get themselves tech ready for the potential of a CBDC. Other institutions, around 10%, were looking to take on skilled workers who had the sort of the skill in this and the knowledge in this market. So it feels at quite nascent stages at the moment. From a Lloyds perspective, though, we are an investor and we are a participant in Finality, which will be the first UK regulated DLT technology. So we are working on use cases as how we can make money smarter, and we will continue to look for those use cases, probably primarily, as I say, in the wholesale markets, the regulated liability network. Regulated liquidity network likely being the first place that we will start, and then the use cases can branch out from there once we've sort of tested the concept and made sure that the technology works. However, I think there are some really interesting developments that are going on outside of the UK. So if you look at Partior in Singapore, that looks like a really interesting use case in terms of how we can use DLT technology to speed up and make more instant and create 24/7 capability for cross-border payments. And actually, of our respondents that did welcome a digital pound, over 60% of them said cross-border payments was the area they expected to see some of the benefits arising. So looking at those developments overseas as well as what's going on in the UK.
Excellent, excellent. And away from CBDCs, I mean, AI was another key focus of the survey as well. Another huge topic that's been, across industries now, especially at financial sector, it's been discussed a lot at Sibos as well. What were some of the things that came out from that?
Yeah, so unsurprisingly, over half of our respondents were interested in the opportunities that AI could bring to their business, particularly in terms of improved profitability and productivity. And I think, from all we've heard about AI at Sibos this week, you can see that it's a clear industry trend. Strangely, only about a third of our respondents were actively investing in AI technology at the present time. I think there's a quote in the survey where Paul Donger, our head of data and AI ethics at Lloyds Banking Group, said, if organisations are not actively investing, they could be losing ground and getting left behind compared to their competitors. And so that's why I think it is important to start looking at use cases for AI and start actively investing and implementing them across business models.
I suppose off the back of that, how has Lloyds been actively trying to tap into this technology then?
So AI is not something that's sort of stranger to how we work at Lloyds. We've been using natural language processing and machine learning for quite some time. I suppose the primary use cases are around how can we use web chat and chatbots to improve the customer service experience and availability for customers. Things like how can we improve our manual operational processes through the use of robotics to create better efficiency and accuracy. How can we use machine learning to drive some of our forecasting capability, for instance, in terms of our current account balances? So, how do we manage our liquidity and funding? So loads of really tangible use cases that create benefit for the group in terms of colleague or client experience, or our bottom line profitability and our productivity. Where I think it's more exciting is that we started partnering with fintechs that are actively using AI to create sort of unique and beneficial customer experiences. So in June we announced a partnership with FinTech, who are a sort of AI and machine learning based rules engine, creating a platform for customers to create a hypo-automated real-time treasury and payments management system. We're really excited about the opportunities bringing that to our client base.
Excellent, yeah, exciting times ahead. Well, thank you, Sarah, again so much for taking the time out to speak. It's been a pleasure.
Thank you very much.
Thank you.